Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about First Financial Corporation Annual Report. First Financial Corporation provides a wide range of financial products and services to its customers across several states. At the core of their offerings are various types of deposits, including non-interest-bearing demand accounts, interest-bearing demand accounts, savings accounts, time deposits, and other time deposits. In addition to deposit services, the company offers commercial loans that cater to businesses looking to expand or finance asset purchases. This includes residential real estate and construction loans, as well as home equity loans and lines of credit. They also provide secured and unsecured loans, which can be backed by cash or certificates of deposit (CDS). Furthermore, First Financial Corporation offers specialized services such as lease financing, trust accounts, depositor services, investment services, and insurance services. These offerings enable the company to serve a broad spectrum of customers, from individuals to businesses, with their diverse financial needs. The company's extensive range of products and services has been in operation since 1834, making it a well-established player in the financial industry. Headquartered in Terre Haute, Indiana, First Financial Corporation continues to provide its customers with a comprehensive suite of financial solutions across multiple states. The stock price of First Financial Corp has seen a substantial increase of approximately 48.72% within the past year, rising from $21.10 to $31.38. Several key events have contributed to this upward movement. Strategic acquisitions played a significant role in driving the company's growth and revenue expansion. The acquisition of Westfield Bancorp and Bank Financial has enabled First Financial Corp to expand its market share and increase revenue. These moves were seen as strategic and have positively impacted the company's financial performance. The company's strong financial results, particularly in the third and fourth quarters of 2025, have also contributed to the stock price increase. Record-breaking net income and adjusted earnings per share, EPS, demonstrate a durable shift in the bank's profitability profile. These positive earnings beats have been viewed as signals of the company's financial health. Analyst upgrades and increased price targets have further boosted the stock price. Several financial analysts, including Weiss Ratings, Keefe, Bruyette & Woods, and Hovde Group, have upgraded their ratings and raised their target prices for FFBC. These positive revisions have contributed to the stock reaching a new 52-week high. The company's consistent dividend payments have also maintained investor confidence in First Financial Corp. The reliable dividend has provided a stable source of income for shareholders, further contributing to the stock price increase. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline in financial institutions can be attributed to several key factors. On the growth side, an increase in net interest income, origination of loans held for sale, and servicing fee income are significant contributors. Additionally, securities gains and net gains on sales of loans also contribute to revenue growth. On the other hand, a decrease in demand for loans and other products/services offered, as well as a decline in deposit balances due to overall reductions in client accounts, are primary drivers of revenue decline. Other factors such as changes in interest rates affecting net interest income, economic downturns, and labor shortages also contribute to revenue decline. It's worth noting that some factors have a neutral or no significant impact on revenue growth or decline. These include the introduction of new products and services into the business, entry into new markets where experience is lacking, and failure to realize expected revenue increases from an acquisition. Net income and profit margins experienced significant fluctuations between 2023, 2024, and 2025. In 2024, net income decreased by $34,161 compared to 2023, but increased by 67% in 2025. This increase was largely driven by a 54.35% rise in return on average assets from 2024 to 2025. However, profit margins were negatively impacted by several factors. The net interest income margin decreased by 17.8% from 2023 to 2024, and then increased by 30.1% from 2024 to 2025. Non-interest income margin saw a significant increase of 142.9% from 2024 to 2025, although this may be an error. The main reasons for the changes in net income and profit margins were higher costs associated with servicing loans, foreclosing on properties, and liquidating foreclosed properties. Additionally, increased non-interest expenses, inflation-driven increases in interest expense, decrease in demand for loans due to rising interest rates or consumer sentiment shift, and deterioration of credit quality all contributed to the fluctuations. The increase in net income in 2025 was largely offset by potential losses on available-for-sale securities, higher operating expenses from licensing agreements, and possible impairment of goodwill associated with an acquisition. These factors highlight the complexities and challenges faced by companies in managing their financial performance amidst changing market conditions. The company's financial performance indicates a consistent generation of positive operating cash flow. The data from various pages of the report confirms this trend. On page 58, it is stated that net cash from operating activities for all 3 years, 2025, 2024, and 2023, are positive, with amounts increasing over time. Furthermore, on page 75, the calculation of operating cash flow is provided, which shows a significant positive amount of $151,916. This suggests that the company's operations are generating sufficient cash to cover its expenses and investments. Additionally, on page 114, it is mentioned that net cash from operating activities for all 3 years are positive, with varying amounts. Overall, these findings indicate that the company is successfully generating positive operating cash flow, which is a crucial indicator of its financial health and stability. The company's debt level has undergone significant changes over the past year. According to the extracted summaries, the total debt increased by 123% from $215,177 to $480,676 on page 35. Additionally, short-term borrowings rose by 56% from $187,057 in 2024 to $292,468 in 2025 on page 89. Furthermore, the total debt has increased from $28,120,000 in 2024 to $188,208,000 in 2025 on page 90. However, interest expenses have not followed a consistent trend. On page 35, they decreased by 4% from $89,756 to $85,720. Yet on page 55, they increased by 46.7% from $61,135, 2023, to $89,756, 2024. Moreover, interest expenses have remained relatively stable, with a slight decrease from $88,545 in 2024 to $86,436 in 2025 on page 58. Despite some inconsistencies in the data, it appears that the company's debt level has increased significantly, while interest expenses have decreased slightly or remained stable. Management's outlook for the company is cautious, with a focus on managing risks and maintaining an adequate allowance for credit losses. They acknowledge that domestic economic conditions and government monetary policies can impact earnings, but express concerns about potential risks such as economic downturns and decreases in net interest income. To mitigate these risks, management has increased the quantitative amount of the allowance for credit losses by $800,000 and will continue to monitor changes in financial conditions, economic conditions, historical loss experience, and market conditions. They are also actively monitoring commercial real estate exposure through periodic reviews and stress testing. In addition, management is focused on maintaining adequate liquidity to meet customer obligations, managing liquidity risk through sufficient liquid assets and core deposits. They are also assessing the impact of new accounting standards on their consolidated financial statements and related disclosures. Overall, management's strategy is centered around prudently managing credit risk and maintaining a strong allowance for credit losses to absorb expected losses in the loan portfolio. The bank has made significant moves through acquisitions and divestitures, shaping its financial landscape. In terms of acquisitions, the bank has expanded its operations by acquiring SimplyBank in June 2024. This strategic move is expected to enhance the bank's customer base and market share. In addition to the acquisition of SimplyBank, the bank has also made a significant investment in purchasing credit-deteriorated (PCD) loans. This acquisition is likely aimed at diversifying the bank's loan portfolio and increasing its revenue streams. Notably, there have been no divestitures mentioned in the extracted summaries, indicating that the bank has focused on growth through acquisitions rather than shedding assets. The company has a history of rewarding its shareholders through various means. One way it has done this is by paying dividends to its investors. The company's commitment to dividend payments is evident from the historical data provided on page 32, which shows that it has consistently paid out dividends over the years. In addition to paying dividends, the company has also been actively involved in share buybacks. This strategy allows the company to return value to its shareholders by purchasing back a portion of its outstanding shares. The details of these share buybacks can be found on page 34, which highlights the specific years and amounts involved. Furthermore, the company's treasury stock purchases in 2023, 2024, and 2025 are documented on page 114, demonstrating its ongoing commitment to this strategy. That concludes the financial summary for First Financial Corporation. Feel free to comment below, and I will be happy to answer them when possible.